Hello and welcome to Investing Confidential. Well, you, I warned, I told you the reality that S&P just wasn't going to go down until it does go down. Well, we're in this period now where it's very worrisome that the Nasdaq and the S&P they get strong in the morning and they can't hold the gains. That's a clear sign that we've topped out. And look, why have we topped out? Well, very simple. Look why the market went up. The market ripped higher basically because everyone thought, because Powell the Dove signaled that rates are going to go down. It's going to cut rates 6 times. Okay, 6 times. And the reasoning hasn't changed much, right? He wanted to cut. There wasn't any reason to cut, but he wants to cut because his puppeteers, because he's a puppet, were pulling his strings, and they told him, "You got to cut. We're having problems. We need the IPO market back. We got an election year coming up. We need to get the Biden administration back in office." I mean, this is obvious. So Powell stood up and he indicated that he's going to cut 6 times, 7 times, 8 times. It doesn't really matter. There's no reason for it. And so the market's ripped. I mean, a massive rip, and didn't stop going up. And we are here today, this week, when the reality has set in where there will be no rate cuts for 2024. Probably not till 2026, but let's just say at least we know there'll be 0 rate cuts in 2024. Why? Very simple. Okay, here's your first chart to tell you why. The economy, again, all of these economic numbers, by the way, coming out of the Beige Book, which is out of the Fed, the Bureau of Labor, as I told you, I'm not going to go into it. They're all false. It's manipulated numbers. We have become China, okay, 100% like China, where their economic numbers mean nothing, but it is what it is. Now, Beige Book comes from the Fed, okay? It tells you that economic activity is rebounding. You combine this with what I talked about the last video and the last few, that inflation is still very high, very sticky. It's never going to drop to where as long as Powell is there, and he's not going to be there much longer, by the way. Powell will not last the next 12 months. Okay, I tell you right now, he's gone. And it's never going to drop to where he wants it, 2%. He's a fool for saying 2%, but look, it's par for the course. So you got Beige Book activity stronger. You've got GDP, supposedly 2.4%. And you've got inflation that they can't hide anymore. It's oil, it's commodities, it's everything. It's real estate, and I'm going to go into real estate in a second. And by the way, if you're under 40 years old, you better stay. Listen to this. I got some eye-opening information for you. But the bottom line is that all of these indicators, inflation, economic activity, point to 0 chance for rate cuts. No reason for rate cuts, except that we're in an election year, and Powell's political. His puppeteers are political, and they want the market to keep going up forever, manipulating. Okay, and when you look at really what's been driving this market, and what's really been driving the markets for a long period of time, but especially since 2020. Okay, since this fake pandemic, and it was fake, by the way. I mean, when you look at it, man, there's so much coming out now that if you're blind if you don't believe that something went on here, that not the pandemic itself, but the reactions to the pandemic. Okay, the pandemic was real, but the reactions to the pandemic. Bottom line is, as you can see here, the markets, the stock market, the indexes, and let's go back to this. It's not the stock market, it's the indexes, right? The S&P, the Nasdaq indexes. The reason these things have exploded is 110% because of buybacks. Now, I say 110% because it is The only thing driving this market up, nothing else. You got index buyers, and you've got stock buybacks driving the market higher, feeding the flames. And what makes no sense about buybacks at these levels is we're at all-time highs. The only reason you would buy back stock at all-time highs is because if you're trying to manipulate your own stock price because your compensation is based on stock, which is really the case here. So this is greed and this is manipulation. But it's fake. It's not earnings. You want earnings. You want dividends. You want things that are really economics to drive your stock prices. Now, you got buybacks. Total, complete manipulation. And I hope with this new administration coming in, I hope somebody does something about buybacks because it's an absolute disgrace that that this is allowed to happen. It's the only country in the world where companies buy back stock at the highs just to generate returns for their personal options accounts. All right, their corporate options. Okay, and then you look at the problem with all these buybacks is every time you buy back stock, you cancel stock out. And if you look here, okay, the global equity supply, look, what's happening in stocks with this manipulation, the same thing's happening in real estate, and I'll go into it. They're taking all the supply out. They're taking all the liquidity. It's gone. There's no liquidity. Absolutely no liquidity. Now, you'd think you'd have the opportunity to do a lot of IPOs, et cetera, but that's not really happening either. So they've taken dramatically amount of supply out of the equity markets. And this is a global thing, right? It's not just the US, but the US, given all the liquidity, there's no supply. So it makes it easier to manipulate prices when there's less supply. And that's what's happening today. And this is really bad for my friends at Wall Street. They can't get these IPOs. This is a golden opportunity for IPOs, but they can't. Okay, Reddit just came out. It's about to break IPO price. It's getting pummeled. Who's going to buy an IPO? Only a fool would buy an IPO at today's valuations in today's market. Speaking of Wall Street, they were even double screwed here because if you see here, China, IPOs are almost zero, nothing. And this is a huge moneymaker for our Wall Street friends. Okay, so this is all pointing also to the collapse. Wall Street's collapsed. Their business model is dead. But again, what we're seeing here is just, unraveling. Okay, and then you've got this Magnificent Seven. Now, remember, the Magnificent Seven is no longer Magnificent Seven anymore. Tesla, Apple, Amazon, these guys are just crumbling one by one. Even NVIDIA, they just one by one, they're falling. But still, as of this month, even with the weakness, what this tells you is that 7 stocks represent such a giant portion of the S&P, mammoth. 7 stocks. This is breadth. This comes down to breadth, okay? Market breadth is the worst, as you can see here, is the worst in 100 years. 100 years where you've had these few stocks driving the entire market. And there's a lot, you've had the supply, which I mentioned, you've got derivatives, you got all these things pointing to a complete manipulation, and 7 stocks driving everything. Okay, so this is the most dangerous market I've ever been in my lifetime. Most dangerous market ever. Okay. Let me talk about real estate now because this is all financial assets, and real estate's part of financial assets. And I hope the young people are still on because I'm going to show you some eye-opening charts here, and this is really for you. First, this is what's going on in the world, folks. Developers. I'm talking about the U.S. here. Developers. What are they doing? They're only building rental homes, multifamily, single family for rent. They're building rent, building rent, building rent, because the rates were manipulated so low that you can build and rent and get a really good return. They figured it out. So they want you to never own a home, because the American dream is dead. They killed it. The hedge funds, which bought up all the supply, like they did in like the corporations are doing with the buybacks. I mean, this is all the same nonsense. And now they're building massive amounts of rental homes because the prices are still so high, because they're warehousing everything. And I'm going to go into that in a second, that there's no alternative for you. They want you to be a Russian serf. They want you to be a renter. They don't want you to ever to own anything. They don't want you to build wealth. Okay? And yet, with all that manipulation, you've got real estate is starting to rise fast. As you can see here on the top, okay, for 2024, okay, right now, as of April, supply is greater than it was since the pandemic, 2020, 21, 22, 23. It's rising. It's rising. This is not good for our hedge fund friends and the Blackstones who own all this real estate to rent. It's not good for them. Okay, stand by. This is going to get more interesting as we go along. And plus, we're not really seeing the effects of this because New York, which is the most manipulated real estate market I've ever seen since Japan back in 1989, which completely collapsed. Okay, New York has such a giant weighting that only if you're out of New York, you're seeing this. Whether you're in the Carolinas, Texas, Midwest, parts of Southern California, real estate is so weak, folks. It is so weak. There's no buyers. Supply's coming on the market. I mean, it's a mess. But the media capital of the world, it's booming. But it's like New York is like a shiny apple that's rotting, because New York has the highest share of homes in foreclosure in the country. But yet, call someone you know in New York metropolitan area. It's booming. You put a house for sale, it's gone still in 3-4 days. Austin, Texas, the hottest market in the world, in the United States a few years ago, you put a house for sale, you may not get a bid in 6 months. New York, it's 6 minutes still. But yet, everything's in foreclosure, the highest percentage of foreclosure. It's a manipulated market, folks. And something happened a couple days ago, okay, in New York, where this governor, I don't even want to call her a governor, passed a law called 421A. Now, no one's paying attention to this, but basically, this is a housing deal, sweet deal for her development friends who want to build new developments. But it's horrific for tenants, and it's even more horrific for small, more real estate owners, real estate management companies, because basically what it does, it's going to continue to encourage this concept of warehousing. Warehousing is very simple. And it happened in San Francisco. It's happening in New York. It's happening anywhere you see. And it's probably happening a little bit in Miami, but much less. So in New York, developers or real estate people who own buildings, I don't know what you call them, slumlords, let's call them slumlords. New York has a lot of laws about, trying to keep apartments at low prices, fixed rents. And what landlords do is when an apartment comes available, they don't rent it. Keep it empty. They call it warehousing. There are thousands and thousands of empty apartments that are under the rent control, right, where you can't raise rents like crazy, that are empty. They're not being renovated. They're not being rented. So, like the corporate buybacks, like everything else, New York has been doing this for years, aggressively since the pandemic. They're warehousing thousands of apartments, thousands, and driving rents through the roof, still today, through the roof. There's layoffs everywhere, people leaving New York like in droves, but rental prices keep going up because young people keep moving to New York, and these lowlifes are warehousing. They do it in San Francisco. They're doing it in New York. Anywhere where you see, ridiculous rental prices, I guarantee there's warehousing going on. It's mainly the big cities. But, okay, it can't last forever. It can't last forever. And it's about to implode. So if you're going to look for an apartment in New York, I don't know why you'd move to New York, but if you want to, just wait. It's a matter of time. As I said, about a year and a half ago about real estate, just wait. It's all coming in. It's all coming in. Okay. And so look what's happening in the country. Okay. Now, by the way, going back to New York has such a giant weighting. The rental prices and real estate have such a giant weighting in the overall Bureau of Labor Statistics CPI that it's again backfiring into the White House and Wall Street. It's going to keep CPI higher until it implodes, but then it's going to hurt. It's incredible. You've got a very liberal city, a very rich city. All these real estate owners got a lot of money, and then they all support the White House and the current administration. And you got Wall Street, the same thing. They're all fighting against each other. They want to, Wall Street and White House want to bring inflation down. In order to do that, they need to crush the New York real estate market. To crush it. That's where their donors come from. So this is ridiculous. All right, let's move on here. FHA loans. Again, this is a strong economy. Okay, look at delinquencies. They're exploding. Absolutely exploding. These are housing loans, mortgages, exploding. It's incredible, and mainly because of unemployment. And here we see the dilemma for the Fed, because I think the Fed believes, like I do, like a lot of people do, that we are about to have an explosion in unemployment. Okay, here's one example: ISM employment index, leading indicator that we're going to have a real big jobs and employment issues, right? Unemployment rising. Okay. And one of the main reasons is, look, I point this out, small business, I keep saying this over and over again, drives everything. And look at small business optimism. It's lower than the pandemic, the peak of the pandemic. It is a disaster. And what do? They don't hire and they fire people. Okay. And here you got, again, going back to these manipulated job numbers, you've got jobs, temporary unemployment, and employment, permanent employment. Temporary jobs have just fallen off a cliff. Fallen off a cliff. Employment's about to go with it. And with inflation at these levels, the Fed would love to cut, but they can't. They can't. That's why Powell wanted to cut. He knows what's coming, but he can't now. There's no way. Because he's a fool. A fool. Okay? And again, another thing, trouble ahead for you look at non-farm payrolls, the trend is lower, less people employed, hiring intentions. Again, we talked about that of the small business, NFIB, the small business. Look at the hiring intentions at the bottom. Negative. Negative. There's a disaster coming, folks. In fact, it's here already. It's here already. All right, young people. Let me tell you why you got problems. Okay, here's the first chart here. Share of the financial assets, really equity, mutual funds. Your parents, people like me, they own everything. They own all the stocks. You own, as you guys, you own nothing. You own nothing. You're buying Bitcoin, you're playing options, but you don't have any wealth. Now, obviously, down the road, you're going to get an inheritance, but you don't own anything. You're not creating wealth. Okay, and here's even worse: real estate. Okay, your parents own everything. You own nothing. You're renting. You're going to New York City and you're paying $4,000 a month for a studio, or you're sharing three people are sharing a 2-bedroom for $7,000 a month or $8,000 a month. That's what you're doing. So you own nothing. You're going to rent forever. And this is what, now you got to reverse it. Look, going back again, this is kind of a recent phenomenon, but it's exploding. This is a trend, but trends can be reversed, folks. Trends can be reversed. And I think for the future of this country, this trend has to reverse. Young people need a stake in the country. A stake in the country means you need to own a home. You need to own real estate over the long term. But it's too expensive right now. And I don't blame you not for buying. But hopefully these manipulators in Washington and Wall Street get it in the end. And they get to be taken down. They're wrong. Powell, they all need to go. And there's going to be a financial issue. There's going to be an economic issue. We're going to go through tough times. There's no doubt. But you need to go through tough times to reverse all this nonsense. So S&P's topped out finally. Okay, it hasn't collapsed, but it's topped out. Real estate market's coming in. The American dream is coming back. If you're in New York, you're insane. You've got high taxes. You got terrible politicians. You've got real estate market completely manipulated. Good luck to you there. But if you're outside New York, you got a shot. And you need to reverse some of these trends, young people. You need to start creating wealth for yourself. And if you can't do it in places like New York, need to go other places. So investors, as always, got rough times ahead. So be careful out there.